What if the United States became the world's biggest Bitcoin superpower?
This afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower.
This isn't some sci-fi fantasy. It's a real possibility thanks to the Bitcoin Acquisition Act of 2024. This groundbreaking proposal could see the U.S. acquiring a staggering 1 million Bitcoin, around 5% of the total supply. But how did we get here? Why take this audacious step? And is this bold remark brilliant, or, as skeptics claim, a financial gamble of epic proportions? Let's investigate in the video. Believe it or not, the U.S. government already holds a significant Bitcoin stash, roughly 207,000 coins. With Bitcoin's value hovering around $100,000 per coin, that's a jaw-dropping $20.7 billion sitting in Uncle Sam's digital wallet. But how did the government become such a major player in the world of cryptocurrency? The answer lies in seizures of Bitcoin linked to criminal activities, most notably from the infamous Silk Road marketplace. In 2013, the FBI dismantled Silk Road, a dark web platform notorious for facilitating illicit trade. At the center of this operation was Russ Ulbricht, also known as Dread Pirate Roberts. When federal agents arrested Ulbricht, they seized his laptop containing a staggering 144,000 bitcoins. This single operation not only disrupted one of the largest online black markets, but also cemented the U.S. government's position as one of Bitcoin's earliest major holders. Over the years, similar operations have led to additional Bitcoin confiscations, creating a substantial digital asset portfolio for the federal government. Building on this foundation, Senator Cynthia Lummis introduced the Bitcoin Acquisition Act, a proposal that could take the U.S.'s crypto involvement into unprecedented levels. The plan is ambitious. The Treasury would acquire up to 200,000 bitcoins annually over 5 years, ultimately building a reserve of 1 million bitcoins. These bitcoins would be held for at least 20 years under strict restrictions, with no option to sell during that period. Funding this monumental acquisition would come from innovative financial mechanisms. Instead of selling any physical gold, the U.S. Treasury plans to issue new gold certificates, essentially claims against the nation's gold reserves, but valued at current market prices. With the U.S. gold reserves estimated at $775 billion, this approach would allow the government to leverage its assets without liquidating them. Additionally, $6 billion from the Federal Reserve's annual earnings would be allocated to Bitcoin purchases, ensuring a steady stream of funding. The plan goes beyond merely expanding the nation's crypto holdings. It positions Bitcoin as a cornerstone of the U.S.'s long-term financial strategy. Proponents argue that Bitcoin's capped supply of 21 million coins makes it inherently deflationary, providing a hedge against inflation. Moreover, as a digital asset, Bitcoin offers strategic advantages in the rapidly evolving global financial landscape. Supporters believe the act could enhance the U.S.'s geopolitical standing, offering a countermeasure to challenges like BRICS nations seeking alternatives to the U.S. dollar. If successful, this bold move might redefine how nations leverage digital assets, turning Bitcoin into a crucial tool for reducing the national debt and reinforcing economic dominance. Why is the U.S. betting big on Bitcoin? Let's break it down. Bitcoin's cap supply of 21 million coins makes it inherently deflationary. Unlike fiat currencies, which governments can print endlessly, Bitcoin's scarcity supports its value over time. For the U.S., acquiring Bitcoin offers a potential hedge against inflation while boosting its financial position. The Bitcoin Act, with its goal to amass 1 million Bitcoins, aims to cut federal debt by half within 2 decades. By investing in an asset with significant growth potential, the government hopes to leverage future profits to reduce liabilities. Gold has long been a safe haven for preserving wealth, but Bitcoin's meteoric rise and increasing adoption present a compelling, albeit risky, alternative. This strategy aligns with America's ambitions to remain a leader in global finance and innovation. As BRICS nations, including China and Russia, work to diminish dependence on the U.S. dollar, the Bitcoin Act positions America to stay ahead of this geopolitical shift. Embracing Bitcoin could strengthen the dollar's reserve status while asserting the U.S.'s dominance in the emerging digital economy. El Salvador made headlines in 2021 by adopting Bitcoin as legal tender, a bold move that showcased the potential for national cryptocurrency integration. Although the results of El Salvador's experiment were mixed, it highlighted Bitcoin Bitcoin's capacity to revolutionize financial systems. If the US successfully builds a massive Bitcoin reserve, it could secure its leadership in the cryptocurrency space, inspire global adoption, and redefine its economic strategy for digital future. By taking this ambitious step, the US is betting on Bitcoin not just as an asset, but as a cornerstone of modern economic and geopolitical power. It's a calculated risk with the potential to reshape the country's financial landscape and reaffirm its global influence. The Bitcoin Act's reliance on gold certificates has become a central point of contention. The US currently holds 8,133 metric tons of gold, officially valued at $42.42 per ounce, a figure unchanged since 1973. At today's market price of $2,700 per ounce, this gold is estimated to be worth $775 billion. Instead of selling the physical gold, the Treasury plans to issue certificates based on its market value, using the proceeds to acquire Bitcoin. This strategy is seen as a way to fund the initiative without directly burdening its taxpayers. Senator Cynthia Lummis, who introduced the bill, defends this approach as innovative and efficient. She argues that it allows the government to leverage a historically stable asset like gold to invest in potentially high-growth assets like Bitcoin. Proponents believe that Bitcoin's finite supply and historical growth trajectory could make it a valuable addition to the national reserve. They also see it as a step toward reinforcing the dollar's status as a global reserve currency and ensuring America's leadership in the digital financial era. Critics, however, express deep concerns. Trading gold, a time-tested store of value, for Bitcoin, notorious for its volatility, raises eyebrows among financial conservatives. They warn that the unpredictable nature of Bitcoin could expose the nation's finances to significant risks, undermining the stability of gold reserves currently provide. The debate reflects a broader divide between those eager to embrace Bitcoin as a cornerstone of modern finance and those cautious about its speculative nature. While the potential rewards of this bold move are immense, so are the risks, leaving the nation to grapple with the implications of this ambitious economic experiment. Critics of the Bitcoin Act highlight several concerns, with Bitcoin's notorious price volatility leading the charge. The extreme swings in value raise fears of exposing national reserves to significant financial risk. Ethics issues also loom large as skeptics warn of potential conflicts of interest that could disproportionately benefit existing Bitcoin holders. Public skepticism adds another layer of resistance. Many Americans perceive cryptocurrencies as speculative, unregulated, and unreliable, casting doubt on the feasibility of such an ambitious plan. The US, however, is not venturing into uncharted territory alone. Countries like Russia and El Salvador have already integrated Bitcoin into their financial strategies, showcasing both the potential and the pitfalls of national cryptocurrency adoption. El Salvador's pioneering move to make Bitcoin legal tender in 2021 included incentivizing citizens with $30 in Bitcoin via a government app. While the experiment faced hurdles, El Salvador's Bitcoin's holdings now account for 1.6% of its GDP, illustrating how digital assets can play a role in national economies. Will this be a masterstroke of financial strategy or a cautionary tale of overreach? One thing is clear: the Bitcoin Acquisition Act isn't just a financial initiative. It's a bold statement about the future of money, sovereignty, and power in the digital age. This is a story you'll want to watch closely. What do you think? Will the Bitcoin Act be a masterstroke that propels the US to financial dominance, or is it a gamble destined for the history books? Would you trust your nation's wealth to digital gold, or are you holding tight to the tried and true? Let us know your thoughts in the comments. If this story has you buzzing about Bitcoin and the future of finance, make sure to hit that like button, smash the subscribe, and tap the notification bell to stay updated on all things groundbreaking and bold. You don't want to miss the next chapter in this high-stakes saga.